This is the daily fiscal pulse for the 30th of April, 2026. Keep in mind that we're looking back one trading day here, so the snapshot reflects conditions as of Thursday's close, not real time. Let's set the stage for what's moving markets at the moment. Equities and market moves are the main storyline right now. You're seeing headlines like Powell vows he won't be a shadow chair, but a wash clash will be tough to avoid, and that's clearly shaping how traders are positioning. Of course, headlines and actual flows are two different things, so we'll focus on what the numbers are actually telling us. Thursday was a significant day for fiscal activity. The net transfer hit $23.8 billion, with interest payments driving the bulk of that at $31.0 billion. That's real liquidity entering the system. The S&P 500 futures reflected that support. ES closed at 7,238, staying well above the 20-day moving average of 7,012. The 20-day trading range sits at roughly 738 points, and despite fiscal headwinds, price hasn't given up much ground. Zoom out a bit and a different picture emerges. The 5-day spending average is running just $4.3 billion per day, but the 20-day average tells a bigger story at $18.1 billion. That means more cash is flowing through to households and eventually reaching markets. The year-on-year comparison reinforces this pattern. Fiscal year-to-date spending stands at $708.1 billion, down roughly 15% from the same stretch last year. That's a meaningful pullback in the amount of fiscal support flowing into the economy. From a positioning angle, fiscal flows aren't handing you an obvious directional trade right now. Our conditions gauge sits at -26. That context matters though. We've navigated similar scenarios plenty of times, and historically the S&P has managed to average around plus 1.2% over the following month. Even with thinner liquidity, markets don't move lockstep with flows. They can grind higher in their own way. And then there's positioning itself. Leveraged funds are pulling back exposure, which is elevated by recent standards. That kind of reading has historically served more as a caution flag than a bullish signal. So what does this actually mean for trading? With fiscal transfers running below year-ago levels, the liquidity cushion is thinner. When news breaks favorably, equities can still push higher, but when a risk event hits, like a spike in market volatility, the downside can accelerate quickly because there's simply less liquidity underneath to catch the fall. We've also observed 2 straight days of rising fiscal transfers, and that pattern in our research tends to precede near-term strength in ES. It's not ironclad, but it's a setup worth monitoring. On the calendar ahead, the 13th of May marks the SSA payment cycle, the second Wednesday, which can swing near-term flows. The 15th of April individual income tax deadline is annually the biggest reserve drain. Fiscal conditions are restrictive, and what matters now is how much that drag actually weighs on markets. Focus on the scheduled flow patterns coming next. That's where your real edge lies.